Hello, hello, hello. Welcome now, Stock Trades. How's everyone doing today? Happy Friday. Happy March 1st. We got a lot to talk about. All right, guys. So in this video, we're going to go ahead and talk about the market analysis and growth potential of both the S&P 500 and IWM, which stands for the Russell 2000 small cap sector. Very excited to share with you this research here. And let's, without further ado, let's get started. How are you doing? Hey, yo, how's everyone? All right. So market breadth and valuation. So our institutional data sets suggest that the S&P 500 may still have potential for growth. Now you might be saying, whoa, how? Market has been going up like crazy. Well, if you go ahead and do some analysis and look at the evaluations and you exclude FAANG from your analysis, you get an average of around a price to earnings of 15, which is pretty cheap for stocks. And that's excluding FAANG. So there's a lot of deals out there right now. And the fact that over 75% of companies have exceeded earnings expectation, the outlook seems favorable for continued market growth. Likewise, monetary reserve and interest rate cuts. So a significant reserve within money market funds, again, there's trillions of dollars in money market funds, is poised to flow into the stock market with anticipated Federal Reserve interest rate cuts, should not be overlooked. The market is keenly awaiting the Federal Reserve's approach on inflation and the overall macroeconomic landscape. So this is a great outline that I created for all of you guys. So I recommend taking screenshots of this or potentially writing it down on a piece of paper. So the upcoming economic indicators that are very important for this month. The February jobs report will be released on March 8th. It's another significant event that investors are watching to gauge economic health. But the biggest important one here is the February CPI data release. It's scheduled for March 12th at 8:30 a.m. Eastern Standard Time, as for all the CPI reports. And it'll essentially give you data on February CPI, which was last month's. This is very critical because it is going to dictate the decision and overall dot plots on the FOMC rate decision meeting, which is scheduled on March 22nd, which will be pivotal in determining the interest rates of the stock market. So again, we have March 8th, March 12th, and March 22nd. Again, if you like the due diligence that we do, hit that like button and subscribe. Again, we like to give you just straight up, really concentrated market analysis that you really can't get anywhere else. So there is that. So analysis of market run-up. So we believe that there's going to be a run-up all the way until March 12th. But unfortunately, we do believe the CPI results may come a little hot. We're going to have two hot ones. And this will cause potentially the chatter on the retail streets, not Wall Street, because Wall Street, we're already expecting this. We're actually hoping we can average down and do what intelligent investors do. But retail investors may spook the market here, or try to get spooked. And that will ultimately lead to, if the CPI for February is hot on March 12th, lead to a down market all the way up until the FOMC meeting and potentially even lower. And then follows in line with our analysis, which is the second half of the presidential election cycle year will lead to gains in the market. So Wall Street's perception of CPI, we just talked about this regarding how savvy investors will take advantage of this. And inflation concerns and market stability. We do believe that inflation is going down. If you analyze the last CPI report, it was primarily shelter and auto insurance costs. And again, if you were to analyze why auto insurance costs were increasing, it's because used car prices were increasing, and that's leveled off. And it takes some time, as there's a lagging indicator for auto insurance prices to decrease as well. Because again, those used car prices, their parts are expensive, right? Because it's not just the used car that's increased, parts as well. Regarding shelter, as interest rates goes down, mortgage rates go ultimately down, which will ultimately affect rent, hopefully. And that should basically start leveling off as well. So I'm not overly concerned regarding inflation in the long term. Now, let's go ahead and talk about the Russell 2000 and Lobo. I'll explain to you what Lobo means, okay? So overall, separately, the Russell 2000 index for small cap stocks has been outperforming the S&P 500. Wait, what? Do you say that correctly? Yes. If you look in the past month, the S&P 500 in the past month has been up 3.74%. If you look at IWM, Russell 2000, it has been up 5.91%. Okay? Almost 6%. Yes, the Russell 2000 is outperforming. Okay, I repeat, right? Overall, if you were to look at it right now, and don't mind this stress and urge incontinence, this is the medical school stuff. Okay, but going back to stocks here, we can see this ascending channel here being respected, and ultimately, I'm going to see hopefully if we were able to pass this resistance line, but we are due for potentially another drop in the small caps, and that may be the CPI for March, a jobs report. We'll see what that negative catalyst is, but we're going to be watching how high this goes right now. But ultimately, there is and has been a rally in the small caps, which no one's talking about. Because again, people don't really, it doesn't really seem like there is. But if you look at it, we've been making strides, and we broke out of this. And overall, if you were to look at the weeks and overall here, this analysis, no one really is talking about this, but this is a very clear rally here, and we are starting to see that we are making ways up. And then people most likely going to talk about small caps probably once it passes here or near here. But again, we like to keep you guys informed here. Okay, so we are watching this like a hawk. So overall, yes, they are. Small caps are outperforming large caps. This is great on the month. All right. So if you look at Lobo, which is large only buy to open ratios for put to call, again, large only means that these are institutional investors. We have access to strategic data sets that retail investors do not have. This basically data set shows you the put call ratio, not for retail investors, because we know we don't want to follow them. We want to do opposite of what retail investors do, because retail investors usually get it wrong. We want to follow institutional put to calls. And overall right now, we are starting to see, let me just show you the picture basically down here. We're starting to see that, again, this is a Lobo, which is institutional investors, put the calls, and this is IWM. This is not S&P 500. So this is Russell 2000. So when we had the COVID-19 pandemic, the Russell, they had a lot of puts, which is correct. We should be bearish, but immediately after, they became very bullish because there was a lot of calls. Again, puts to calls. If it's a high number, it means there's more puts. If there's a low number, it means there's calls, right? Again, it's how ratios work. Okay, algebra 101. Okay, or like elementary school math that we forget sometimes. So, what I'm basically saying here, guys, now is there's been a spike in puts, which has been warranted given there's an increase in interest rates, but the market has been dipping. The market has been decreasing their puts and increasing their calls on small caps, which is why we're seeing an outperformance on small caps. So what we're basically seeing now is that there's more calls over puts on small caps. And the last time we've seen this was this direction here, which was here, which shows you, we should, be expected to see a great rally soon. And that's all I have for you guys. So if you would like to follow our books, this is our best-selling book, Top 100 on Amazon, for investment and stock analysis, et cetera, et cetera. Also, this is a really good book here. This shows you how to find 10 baggers, what are patterns to look for. It's called How to Find the 10 Bagger. You can find it in Barnes & Noble and Amazon. Just there'll be a link down below in the YouTube descriptions, which if you guys are interested, I highly recommend you taking a peek at this. It's I think it's like $14.99 or something. And again, all profit proceeds will go to our nonprofit. And we are doing articles of incorporation, making it a 501c3, which is very, very excited for this. So it's legally, it's a nonprofit, right? Overall, guys, I'm very excited for the market, and I hope that this was some good information. How you doing, Vladimir? And overall, guys, it's a privilege and honor to be able to share this information and to be able to talk about it and just have a nice and thoughtful and fruitful discussion. If you liked the video, don't forget to subscribe, and I will see you on the next one.